Today, MicroStrategy co-founder Michael Saylor tells CNBC he thinks Bitcoin could hit $13 million by 2045. Bernstein predicts the cryptocurrency could hit new highs of up to $90,000 if Donald Trump is reelected in November. And the co-founder of digital lending platform Ledn discusses crypto regulatory advancements around the world and what we can expect for the rest of the year. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices in the green to kick off the week. As of noon Eastern, Bitcoin climbed more than 3% to $55,000. Ether rose 2% to nearly $2,300, and Solana inched higher by more than 1%. The moves higher come after Bitcoin, Ether, and crypto-related stocks saw sharp sell-offs last week over growing concerns about the health of the U.S. economy. Coinbase has its worst week of the year last week, and Bitcoin miner Marathon Digital sank 20%. As of midday today, crypto-focused stocks are seeing a rebound, outperforming the S&P, with Coinbase climbing nearly 4% and MicroStrategy jumping nearly 8%. Marathon is today's winner so far, soaring more than 8.5% as of around noon. And speaking of MicroStrategy, the company's executive chairman, Michael Saylor, joined Squawk Box this morning, where he noted that the company's Bitcoin strategy has paid off despite all the major price swings.
Since August 10th of 2020, MicroStrategy's bought about $8.3 billion worth of Bitcoin, and Bitcoin's up 44% a year on average since then. The S&P's up 12%. And since we levered it, we're up 825%. The number one performing stock in the S&P is NVIDIA, up 821% as of Friday. So we beat every single company in the S&P index using a Bitcoin strategy.
Saylor also provided his long-term projection for Bitcoin this morning, where he forecasted that the cryptocurrency will soar to $13 million over 21 years. All right, sticking with Bitcoin price predictions as we take a look at our top stories. According to a report out today from Bernstein, the cryptocurrency could hit new highs if Donald Trump is elected president in November. Bernstein predicts a Trump win could lead to Bitcoin reaching a price of between $80,000 and $90,000 by the end of the year, surpassing the current high above $73,000 reached back in March. The report forecasted that if Vice President Kamala Harris wins the election, Bitcoin could fall to as low as $30,000. Now, Trump has taken on a pro-crypto stance in recent months, while Harris has yet to publicly take a position on crypto. Bernstein argues that the tone and clarity between the two political sides on the topic of crypto has been very different, noting that Trump has personally been vocal about making the U.S. the Bitcoin and crypto capital of the world, and that he has mentioned crypto at every policy speech he's made. The report goes on to say that, on the other hand, crypto has not found even one mention in any of Harris's speeches, and that there is no mention of crypto on the recently released policy statement on her website. In contrast, crypto policy is clearly articulated in the Trump policy statement. Meantime, the Wall Street Journal is reporting that Trump's digital currency project, called World Liberty Financial, could create potential conflicts for the Republican presidential nominee if he's elected in November. The article notes that details about the project are scant, but that the team behind the project said last week that it will focus on spreading US dollar-pegged stablecoins around the world and ensuring the, quote, dominance of the US dollar. The report warns that Trump and his children's potential involvement in a digital currency could create conflicts of interest for the former president if he's reelected. That includes concerns over whether Trump might be inclined to push crypto-friendly regulations that benefit his own business. We reached out to the Trump campaign for comment, but didn't hear back right away. Next, a federal judge ruled that Coinbase must face part of a complaint filed by shareholders. This comes in response to the company's motion to dismiss the lawsuit. In the decision filed Thursday, U.S. District Judge Brian Martinotti said the court finds that the plaintiffs adequately alleged that Coinbase misleadingly described a favorable picture of its odds of facing SEC enforcement action by emphasizing that the listed crypto assets were not securities. The lawsuit alleges that Coinbase downplayed the likelihood of SEC enforcement action against the company, and that it knowingly concealed that it listed tokens from 2019 through 2021 that it knew were likely securities. The regulator sued Coinbase in June of 2023, accusing it of operating as an unregistered securities exchange. At the same time, the judge dismissed claims related to part of the bankruptcy, as well as proprietary trading, where a firm trades assets with its own money. The judge said the plaintiffs failed to adequately allege misrepresentations on Coinbase's part. We reached out to Coinbase, and a spokesperson said that the court agreed that a significant portion of the plaintiffs' claims should be dismissed, and that it's important to note that the remaining pieces are allowed to move forward because of the way this motion to dismiss works. The court draws inferences based on the plaintiffs' allegations rather than the reality of what happened. All right, for our main story, Crypto World's Mackenzie Sigallo spoke with Mauricio Di Bartolomeo, co-founder and chief strategy officer of Ledn, a crypto platform that offers crypto loans and savings accounts to investors. They discuss crypto lending and regulatory advancements in crypto around the world. He also weighs in on the role digital assets have been playing in the upcoming U.S. presidential election.
So your digital lending platform recently secured the industry's first $50 million Bitcoin-backed syndicated loan. We're also learning that Ledn handed out more than $1 billion worth of loans in the first half of this year. What do these developments signify?
Hi, Mackenzie. Great to see you. And I think what this is really showing is that Bitcoin is here to stay, and that Bitcoin lending and Bitcoin as a reserve asset is effectively here. Our loans, Ledn's primary business is we lend dollars to people that don't want to sell their Bitcoin. So that is where that facility that we just got from Signum plays in, because they are lending us dollars that we can then turn around and lend to our clients. So more dollars for us to lend means more capacity, means better pricing down the run, means this product becomes even more compelling for our clients. And then on the other side of the house that rounds up the 1 billion figure that we've lent year to date is our Bitcoin lending business has also exploded thanks to the new ETFs coming into the scene, because now market makers and authorized participants need to borrow spot Bitcoin in order to make sure that the unit prices are always tracking spot, and they need spot inventory to do this, so they come to Ledn.
So much of the business obviously has to do with the markets, the price of these top coins. So Bitcoin kicked off the new month in the red, trading below that $60,000 threshold, well below the all-time high above $73,000 that it hit in March. Why do you think this is? And do you think that we could surpass that March peak by the end of the year? And if so, what would it take?
So to answer your second question first, I do think we can surpass that by the end of the year. I think it will take a few things, but to kind of bring you back to the first point you made, which is Bitcoin starting off the month off the highs, I don't think this is a Bitcoin specific issue. I think if you look at the NASDAQ, it's also slightly off the highs. If you look at the S&P, it's also slightly off the highs. So I think this is sort of a natural progression of market cycles. I don't think the fact that Bitcoin is off the highs is specific to Bitcoin or says anything sort of read too much into it outside of it's just part of the natural cycle where there's a lot of uncertainty around US politics. And I think you're seeing this reflected in the markets where they're just sort of range bound until we probably get some more clarity post elections.
Okay, so that you think it's more about the elections, because I think that a lot of what's driven the price in the last few years has also been pegged to what's coming out of the Fed. Of course, there's a lot of conversations around whether or not we'll finally see that first rate cut since 2020 in a couple weeks from now. And I really do feel like so much of the price momentum that we saw in 2021 had to do with decisions coming from Fed Chair Powell. What are your thoughts on that as a price driver versus, as you said, the elections and what might come out of November?
I think it's both. I think it's Bitcoin, as any other financial asset, moves to the rhythm of the Fed, right? Like so does the S&P and so does everything else. So it'll be very difficult, all things being equal, that under restrictive monetary policy, you're seeing financial asset prices sort of run up and to the right as they do when monetary policy is looser. So I think it's both. It's a liquidity driven issue, but it's also a politics issue, because if you look at the difference between the two platforms coming up on the elections, you have on one end a platform that wants to build the future of crypto in America. On the other side, you have another group that's been touting an anti-crypto army for years. So much of what you can build in the US is going to come down to the stance that US regulators take. Look, for instance, how long it took to get the ETFs approved vis-a-vis other countries, right? If this had moved faster, we would probably be trading at different prices, and there would probably be a different type of atmosphere around entrepreneurship and Bitcoin and crypto in the United States today. But given where politics has shaken out, we've seen that has sort of had an impact on how much investment can happen in the US, or wants to be in the US, frankly.
Now, let's talk regulation. You've got probably one of the most promising congressional sessions this year. Chuck Schumer, just a few weeks ago, the Senate Majority Leader, also a Democrat, saying that he believed that one of these bills could be passed into law this year. Certainly a lot of cooperation from both sides of the aisle. How are you feeling about it? How are you feeling about politics, Capitol Hill, finally getting some hard and fast rules from Congress?
I think that Bitcoin can no longer be ignored by either party. And I think that's what you're seeing now with sort of a change in demeanor or a change in posture from the Democrats, who are now seemingly more willing to play ball with the industry and to put in the right regulations so that they can flourish, because they've seen how much donations and how successful the Red Camp has been by basically catering to this industry. So they're recognizing that A, your voting base wants it, and B, it can be a great source of funds for you to continue pushing your platform and your campaign. So I'm optimistic that both groups are seeing Bitcoin for what it is, part of the financial ecosystem that can no longer be ignored. And that's largely thanks to the efforts of Bitcoiners and crypto members of the crypto space that have been consistently lobbying Washington or the Hill in order to get some of this sensible regulation to bring this development into the US, where many people think it belongs.
Last question for you. Obviously, crypto, the industry writ large, has made itself impossible to ignore this election cycle, in large part because of the hundreds of millions of dollars that is being spent on primary elections going into the general election in November. But what's interesting to me is that a lot of the ad spend money where that crypto super PAC cash is involved is going into very traditional ad campaigns that don't mention crypto. Now, the kinds of candidates who are winning are those who are favorable to the industry. So, but my question to you is it that voters care about crypto, or is it that the power of the purse is making this industry impossible to ignore this time around?
I think it's both. I think you're having the Bitcoin lobby or the Bitcoin cohort or the crypto cohort is funding these parties
it's four companies. I think of Fairshake, for example, more than 94% of their cash is coming from 4 companies. None of the ad campaigns, so 36 out of 42 primary elections were won where crypto super PAC money was involved, but those ads weren't mentioning crypto. And so what I'm just trying to understand is whether there's actually a very strong crypto voting bloc, or if it's just that a handful of companies are willing to give a lot of money this year.
Again, I think it's both. I think you're seeing the Bitcoin or the crypto companies that are now publicly traded, like the miners, like the Coinbases of the world that have really big pockets. They're stepping up and saying, if we don't get sensible regulation, our future can be at stake, or we might have to go find a new home. So they have a big incentive to make sure that whatever law gets passed is the law that allows them to flourish. So on the one end, you have them trying to protect their future and trying to basically bankroll the legislation that they want to see on one side. And then on the other side, if you look at the polls or if you look at the data from surveys and such, you have millions of Americans that hold crypto and Bitcoin. And to many of them, this election is a single issue. It's a single issue vote. And so it's both. There's enough of a purse that's coming in from these companies that helps you push your campaign, your platform at large beyond crypto. But there's also that allure of getting that crypto voting base. So I think it's a combination.
All right, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.